channel, and my name is Ruki Ajoba, and this is Market Digest Nigeria. Our topic today is impact of illicit financial flow and poverty reduction in Nigeria. Over 91 million Nigerians are living in extreme poverty. It is said that 3 million Nigerians have slipped into extreme poverty between November 2018 and February 2019. According to the World Poverty Clock created by Vienna-based data lab, 91.16 million Nigerians were living below $1 as of February 13, 2019. In June 2018, the Brooklyn Institution projected that Nigeria has overtaken India as the poverty capital of the world by 86.9 million extremely poor people. This is further confirmed by the British Prime Minister Theresa May, who said Nigeria had become the home to the largest number of very poor people in the world, putting figures at 78 million.
Africa is home to the majority of the world's fragile states and a quarter of the world's displaced people. Extremist groups, such as Boko Haram and Al-Shabaab, are killing thousands. Africa's ocean economy, 3 times the size of its landmass, is under threat from plastic waste and other pollution. Most of the world's poorest people are Africans, and increasing wealth has brought rising inequality, both between and within nations. For example, much of Nigeria is thriving, with many individuals enjoying the fruits of a resurgent economy. Yet 87 million Nigerians live on less than $1.90 a day, making it home to more very poor people than any other nation in the world.
Over the last decade, the economic performance narrative for Nigeria has been increasingly optimistic in light of its sustained impressive growth rate. However, the narrative continues to be tainted by several challenges which continue to hinder the continent's sustainability and inclusive development. IFF are funds that are illegally earned, transferred or utilized and cover all unrecorded private financial outflow that drives the accumulation of foreign assets by residents in contravention of applicable laws and regulatory frameworks. It can be classified into the groups illegal, individual illicit, or corporate illicit. In fact, conservative estimates have shown that without IFF from the continent, Africa's gross domestic product would have been at least 16% higher. In terms of secondary effect, the opportunity to transfer assets from illicit sources abroad also leads to distorted public and private investment decisions. Corrupt members of government and administration will make every effort to enact regulations and channel public investment. However, in countries where corruption allows the elites to unlawfully appropriate resources and transfer them abroad, the motivation to put in place economic and social measures that reduce poverty is weakened. In Nigeria, poverty is counted as one of the country's triple threats, the 2 other being unemployment and inequality. Poor government results in IFF practice and a significant loss of domestic revenues. The names contained in the register of companies operating in Nigeria oil and gas industry are not the real owners. A host of them are just front that they have chosen to present the actual owners, whose identity are often concealed. The identities of the real owners are left out in the documentation process, even though they have controlling power over the activities and assets of such companies. Nigeria should build and strengthen their institution and technical practice to understand and address IFF practice. Let us remember that Nigeria has one of the highest rates of poverty in the world at 33%. In Nigeria, extreme poverty is increasing, nearly 6 people every minute. In 2030, it is estimated that people living with extreme poverty will increase to 45.5%. Beyond the domain of poverty alleviation, the associated implication for poverty reduction and economic growth will increasingly require more on IFF by Nigerian lawmakers. Thanks for watching. See you same time next week. My name is Ruki Ajoba. Please give the video a thumbs up. Bye.